Tell us what looks good to you fundamentally at current levels, and where do you think investors can put in some money post this correction in a SIP format and hold these shares for the long term?
We like is the KNR Construction. It's a specialized player in the road construction. It has backward integration into quarries, into RMC plants. And they have their own equipment and they don't do the subcontracting. So that leads to a better control over the cost and better margins. They have a track record of timely completion. And because of their track record, they have got a lot of bonuses also for early completion of the projects. So they have a pool of about 700 in-house professionals, and with the help of them, they select the right project and do the contracting work. So this company has come out with a guidance of about 44,050 billion dollars of new orders, and based on that, we have a target of about 329. So this is a good stock to accumulate in the declines.
Right. Mr. Vakil, let's discuss this in a bit detail and then we'll go to the next one. In front of you is the chart for KNR Constructions. Remember, it's a very, very sideways trend that we've seen at least from the beginning of March, and at about 255 rupees. The stock is available at a price to earnings multiple of about 14. As rightly mentioned by Mr. Vakil, the stock has corrected over its past so many months. We've seen an all-time high of about 350, 355 coming in somewhere in September of 2021. So that's the high and low range for the stock. Absolutely flat so far. But he very rightly mentions that given the pump priming that economies see in the second half of the financial year and ahead of elections, a lot of government contracts are likely to come up, and KNR Construction is one of the stocks. If you see yesterday's bounce, it was from 200 DMA, and that's the company that we've discussed. Somewhere like 72,000 crores is the market capitalization of KNR Construction. Trailing 12-month earnings are about 506, and if you see the top line, that's somewhere in the vicinity of 4,000 crores. And the peer comparison is also fairly good. So this is one stock which is looking good to Mr. Vakil. Devarsh, which is the other one?
Right. So if you see these signs, we are in the midst of a rise of an economic cycle. And in the first phase of any typical economic upturn, we see that the capital goods or the companies who help build capacities do well. And that's where we have been bullish on capital goods engineering companies. And especially given the upturn in domestic economic cycle, we see the recent quarterly results, we saw that the capital goods, autos did quite well. So one company which is fairly large cap and which we like is the Bharat Forge, which is into the engineering and the various forging suppliers for truck in US markets. What has happened is that over the past 5 years, management have displayed exemplary fiscal prudence. They have recently transformed companies in last couple of years from just a forging company to now a component vendor for oil and gas, power and aerospace. Apart from that, they have a sizable defense business also. So why we like this company is because they have a good defense order from around 350 crore in FY23. They have given a guidance that defense orders can go up to as high as 1700 crore in FY25. So defense business will ramp up. We are expecting growth in the private vehicles and exports, as I just mentioned. They have also done an acquisition, and that's where the capacity is doubling. The JS Autocast business, there the forging capacity and casting capacity is going double because there is local demand and global demand. And apart from that, they have a good order book in aerospace also.
Absolutely.
There the business is going to go from 500 crore to 70.
Right.
So these are the reasons why I think these
Absolutely.
four segments are likely to do well in Bharat Forge. So it's a large cap stocks. We don't expect a very large return, but usually 10 to 15% kind of return in a large cap stock is good enough to accumulate over the long. So Bharat Forge is the second pick from my side.
Absolutely. and the stock is already at a record high, very well appreciated by the market. The 4 points that Devarsh made. The good point is that it's showing a very serious rise in profit and profitability. Last 12-month trailing earnings have been at about 590 crores, and because it's so well liked by the market, the price to earnings is already at 77, but a slow and steady performer over the last 10-12 years is what we've seen on Bharat Forge. Let me just give you a CAGR return. Okay, over the last 10 years, the stock, which is Bharat Forge, has appreciated each year by 24%, handsomely beating the S&P BSE Auto Index, which has appreciated 13%, and the mid cap index, which has appreciated 19% CAGR over the last 10 years. So these are the two stocks that Devarsh is watching. Remember, add via SIP if you like, and always hold for the long term, more than 3 years. Also, please take another opinion if you wish to enter or employ a decent amount of capital in those two stocks.
If you like the video, do like, comment, share and subscribe.